Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, August 20th. It is 6:13 as I'm starting the video. And as always, I recommend that you listen to the video at 1.25x on your video player. Let you run through the material just a little bit quicker. I don't think you'll miss anything. Taking a quick look at futures, large caps off about 0.4. NASDAQ off about 0.25%. Small caps down 0.4. Oil down 0.7. Copper up 0.5%. And really the only thing on the macro front today is August options expiration. Make sure that you do a thorough scan of your holdings. Make sure that you don't have anything expiring today that you forgot about. That always makes for an uncomfortable weekend when you get assigned a bunch of shares you weren't expecting, or that kind of thing. So make sure you either close them out or roll them out in time if that's a position that you want to keep. So let's get into it. Yesterday we had a fairly big jump in the dollar, breaking above this 93.5 level on the US dollar index. And I'm not going to get into a big discussion on the dollar right now, but it's not an environment for commodities. I think you've probably picked up on the last few days. Commodities have been getting smashed. I mean, copper is way off. Oil's in a free fall. Right across the board. And the reason why is, globally, commodities are settled in dollars. So if you have a stronger unit of currency, it's going to take less to purchase a barrel of oil or a bale of cotton or whatever commodity you want to drop in there. So in general, a rising dollar is going to be a headwind for commodities, and we've been seeing that lately. And for new visitors to the channel, I really appreciate you spending some time with me. Hit the subscribe button and the like button, and you'll be sure to be notified of all my content. And also, if you want to pause the video, here's some instructions on how you can simply join our community with your email address, and that way you'll get all my content morning, noon, and night whenever I send out new information, whether it be just a market update or a trade idea, anything like that, and you'll get it in a nice, neat package in your email box. So that's how you do it right there. Let's look at volatility. As we head into Jackson Hole, which is next week, and then, with all the buzz around, taper talk and when are they going to announce and what's the schedule going to be, and is it going to be in Jackson Hole or is it going to be in September? Plus, the recent selling has resulted in a vol spike. And yesterday was pretty interesting because we not only reached up to resistance, we also reached down to support at 20, or just a little bit above 20, 25, whatever. I don't think that exact number is important. But then we finished a little bit higher at the end of the day. So I think while we're in this range, it's going to be tough to simply camp out in longs unless it's something you're really committed to. If it's, a position in a long-term IRA or you're in common stock, that's fine. If it's stuff you're not worried about for, years and years and years, no problem. But if you're trying to do a long swing trade where you're looking out the September expiration and you're trying to get a swing, it's going to be tougher in this area to just hang out, because you're going to see a lot more bigger red days and bigger green days while you're above 20. What I'd like to see, kind of like the all clear, is a move back down below 20 and falling, because right here you're vulnerable to a big topside breakout, like we had over here, where we pop above 25, 27, 30. And with options expiration today, what that means is that next week, the week following a monthly options expiration, typically, it doesn't always happen, but typically you see some added volatility, because all the structural constraints on the market makers, is removed with the August OPEX. All those deltas and gammas roll off as options expire. So the week following options expiration, the market has a lot more ability to find a new level, as it were. And so oftentimes you see some increased volatility that following week. So we're kind of in no man's land here in terms of volatility between 25 and 20. And what I'd really like to see as a kind of a more of a green light is falling back below 20 on the VIX. Now I want to talk about these McClellan oscillators, and if you've been around my work for any length of time, I put a lot of value on these oscillators. Why? Because they're right most of the time. One of my trading tenets is don't fight NIMO. NIMO is the McClellan oscillator for the New York index, and you can see that over just the last few days, we're already down to minus 60. The last time we saw a turn, we were minus 90. So this can go farther south. Envision this as a rubber band. It's being stretched to the downside, and we can stretch it even more, or the market can, and take it down to minus 80 or minus 90. But the point is that you don't want to be caught down in this area loaded to the gills with shorts, because you're on borrowed time, as it were, before this thing reverses. And you can just look back in time where 60 is a good demarcation point. You can see it along here, where it's often an area where you get the reversal. So we're only a few percent off the highs, but underneath there's a lot of damage and a lot of stocks that have sold off a lot. And that's what this is measuring, that it's getting extended to the downside. So, and we also see it here on the NASDAQ. Not quite as far, but 56, that's getting pretty close. So be careful with your shorts. And, it probably wouldn't be a bad time to start at least scaling out of a few. Or, just watching your overall short exposure. I just would not be loaded to the gills down here. I mean, I think it's fine if you want to take a shot at a couple of things. But like I say, really starting to get stretched to the downside. And we saw a leg down in our percent of stocks over their 50. We're down at 36. We had reached down to 25 the last time that we saw the reversal. So we're getting a little stretched here as well. So I mean, a lot of the stars are aligning for a potential reversal zone. So, and I think a lot of that will probably be, I think next week may be, more of a turbulent week, as we discussed with the options roll off. So we may not reverse, this afternoon or early next week, but possibly after Jackson Hole, that first week of September, especially if there's some clarity. But if we get one more big down whoosh, whether it's today or next week, that would certainly be a time to say, okay, we are really extended to the downside now, and that would be your final cue to probably exit most of your shorts. So let's get into the market action. Here's our equal weight SPY. We've been watching this, and yesterday we got a tag of the 50, and that held. I think the 50, which is at 151.68, is a great benchmark / reference level for you to follow going forward. You really want to see that hold. If we bounce up here and then roll over subsequently and lose the 50, then you're going to be solidly back in this trading range, and that's going to open up more downside. So also make note, and this is on a lot of the charts that we've been pointing out, we've got the negative divergence in place, and all that means is that when price is at a high, momentum and RSI are at lower values than they were back in time at another relative place on the chart, and that often signals trend changes. Here's SPY. We took a look down below the midpoint of the channel and then closed above. So, I mean, that in and of itself is positive to stay on the upper half of this rising channel. I think really to get like an all clear, you want to see price recapture the 20 EMA and the 8 EMA. Remember our central tenets. Price above the 8 and 20 day moving average is an all clear. Price below the 8 and 20 is tactically defensive, and price below the 50 is tactically bearish. So we've got these lines clearly marked on our chart. So we want to see price recover, get up into the 443s on this chart. And here's a 2-hour chart. As we drill down lower time frames, we managed to hold the bottom of the channel here after taking a dip below. What we want to see, obviously, is to get comfortably back in the 2-hour rising channel. But it also, yesterday's action gave us a really clear level. And what is that level? It's 436. Notice back in time that 436 acted as support here, and support here yesterday. I mean, it stopped right on a dime at 436. So make sure you have that on your chart. And then the next level below that would come into focus is the 50 EMA, which is in gold, and that's at, call it 434. It's actually 433 74, but then that's a couple dollars lower from 436 down to 434. You can see that right here. And then you lose the 50. That's going to usher in a lot more sellers. And what I would suspect, if that scenario plays out, that we get a little bounce, we relax those oscillators, give everybody, oh, that was, buy the dip, blah, blah, blah. It's just like all the other dips. You buy it and then you're fine. What would happen in that scenario is you'd come up to a resistance point, relax those oscillators, and then make the run for the 50, if that's what's going to happen. Because like right now, as I said, if we make a run to the 50 now, like today or Monday, whatever, with those oscillators being stretched, that would be a recipe for a bear trap, in that with the oscillators so extended, then you make one big flush, scare everybody, but then the oscillators are maxed out at minus 90, and then they snap it the other way after everybody gets short. And so that's what happened last time. I mean, this is where we were the last time this scenario happened, right? And that sucked in a lot of people that got scared, and then they bounced it off the 50. So I think if that scenario played out this time, it'd be very much the same way. And I think the difference is going to be, where are those oscillators if they make one more run to pull the rug? And like I said, right now, we're already starting to be stretched. And remember, down here we were at like minus 90, and that was the reason why we said get the F out of our shorts and get long, and we got a beautiful bounce out of that. Drilling down, if you're an active trader today, I think you can key off of 441. Now we're below that now with we closed below last night, and now we're a little bit red. But what I want to say is, you can see here that was support, and then yesterday 441 was a place where we had like 6 bars where it could not break above. So for today, if price were to take out 441 to the upside, that would be a really nice place to be long after having taken out this clearly defined resistance level. And below that, we've got 439, and then remember 436 was the low. So we've got some support layers on the way down. If you want to try and play bounces off of there, or reversal points, those would be the places that I would look for that. Qs, same kind of look. We did not. I think for the Qs to get on back on track, it's got to break back above 365, get on the north side of the midpoint of the channel. You can see here that in the bright pink and the navy blue EMAs, those have both intersected right above price, right at around 365. So we want to see price recapture the 8 and 20 day on the daily chart to and break back above this midpoint line, to kind of get a coast is clear a coast is clear moment for us. And on the downside, we've got the 50 right here at 357.50. So that's a very clear point on the chart as well. Here it is on the 2-hour chart. You can see that 365 is an important level. Got a gap above. SPY was able to, here was the gap down open, and we talked about be cognizant of them wanting to fill that morning gap right away. Didn't have to happen that way, but it did. So if you were actively trading it and we had that open, your buy point would have been on the recapture of 361, recapturing a level from below, and then you got a nice lift right up to 365 where price struggled the rest of the day. And here's the case for, and it clearly shows it, a series of lower highs and lower lows. So, and this 365 level would be an opportunity for price to put in a higher high, if it can move up this way. And then a very big technical event would be if price can fill this gap, because then it would, obviously come way up here, and that would probably mark a trend reversal to the upside. Small caps continue to struggle right down at the bottom of the box. I would really, on this one here, we've got the 200 down at 210, and we've got the bottom of the box at 211. I would consider that a support zone rather than, discrete points on the chart, because I wouldn't be surprised if in some kind of a flush move, come down and tag the 200 and bounce from there on that first tag. So I wouldn't, if it comes down here and it gets to 210.50, even though it's at the below the bottom of this box, I would not go hog wild. Oh my God, we broke the box and now it's a massive short, because you've got the 200 right there. I would use that as your line of demarcation, that you can be long above, but you lose the 200, that would likely bring in a lot of sellers. So be careful on the short side on IWM, even though it's weak. We are at a place where I would expect a bounce off of support. And here's the way I have it marked on the chart. We had a low back at 210 back in the middle of July. I wouldn't be surprised, and that's where the 200 is now. So objectively speaking, you want to take a long at 210, figuring on a retest of this low and a tag of the 200 at 210. That's where you've got an objective long, and that's the way I would play that. Here it is on the 30-minute chart, not really adding a lot of value there. Let's move on to FAANG. FATMAAN, Facebook was, it got a bounce like all of them. This 352 got up and recaptured 356. That's your clear pivot for today. I think to get things back on the right track, price has got to take out 358, and then that would open up the top of this box here. You can kind of see this trading range open up for a run to 364 and be in a position to fill that gap if things got bullish. But unless and until price can break above 358, it's going to be obviously trapped below. You can see all these candles here where it could not get through, and now it's kind of pinned below. So I think 356 is your clear pivot for today. Apple took a look below this 145.50 and then recovered it. And just for active trading, the active sequence, to give you a way to think about that, if you were focusing on Apple and you had this chart in front of you or your own chart, you can see that 145.50 was a very important level of interest where it served as support all these times, right? So yesterday, on the big gap down, the world is ending, right? We lost that level. You watch carefully because that's, a momentum overshoot. Then when it comes back and it recaptures that 145.50, that's your opportunity. Why? What was once support is now resistance. And then when you break above, you're breaking through resistance, and that's your buy signal. So that was a really important line, and it will continue to be an important line going forward. And then look where price went. So you buy, comes right up to this level here, 147.50, that in prior trading was an important level of resistance, and here it was resistance again. So with price at 146.50, really simple. You've got 147.50 above as resistance and 145.50 below as support, and any breakouts beyond or below that, then you'll get, that'll be your breakout points. And, if you're really active and want to trade it, you've got 146 or 147.50 and 146.50 as, what I would regard as inside the trading range. Tesla didn't do a lot yesterday, 2%. So it was up here in this nice bull flag, and yesterday kind of took the air out of it. But after the opening candle, it really didn't do anything. So I think nothing has really changed from the standpoint that 670 is your active pivot for intraday trading. On the upside, it needs to take out 690 to get more traction in the next week. And then on the downside, anything below 650 would open up this 625 that you can see back in the chart was an important level. Microsoft had a great move. They announced that they're going to increase the pricing on their Microsoft 365 suite. I didn't see what they're raising it to, but I mean, when you got the whole world using it and you raise prices, I mean, everybody just has to buy it, right? So it's nice to have that monopoly that you can raise prices and everybody has to buy it. I guess it's the first time they've had a price increase in a long time, but it's obviously going to flow directly to the bottom line. And this thing did a moonshot, basically right off the open. It came right back. And so, again, let's break it down. Here was a line of resistance. That was the breakout to all-time highs. We had that back tested just the other day, which turned out to be a gift. it held and moved up into this newer range. And so yesterday, you had the break below, and then the recapture of this big level, and that was your first entry point. And say, okay, you were distracted and you missed it. There was a lot going on. You were scared of, is this thing a head fake? Is it going back down again? Then your second opportunity was right here. Why? Because you can see that here, here, and here were levels where price pulled back and held. So right here was let's see, that was Wednesday's nasty closing candle. It stopped right on that line. So then yesterday, on the recapture of Wednesday's low close, was your second chance. And then your third chance was a breakout to all-time highs, right? All-time highs you got to buy. So that was a buy point there. Now, let's say you've never been in Microsoft, you're not in Microsoft, you missed the whole thing. Here's what I want you to do. Alarm 300. Why? Well, you remember Jesse Livermore says that you buy a stock when it crosses 100, when it crosses 200, when it crosses 300, because chances are you're going to get an explosive move once that psychological level gets taken out. And the most recent example of that was AMD. Broke out to all-time highs over 100, and then we got like a $15 move in like 2 days. So alarm 300, what you may see is just some backing and filling below 300, but eventually, I have no doubt, there'll be a breakout above 300, and you want to buy that. So we've got a big bull flag here. It may consolidate here and then go, or who knows what it might do. All I'm saying is this is a bullish setup, and even today, if you wanted a lottery ticket, or if things look good and you get a breakout above 297, right, to new highs, then you could buy that 297 and figure that 300 will be a magnet, and I think it will be. I think price at a minimum will want to go up and tag 300, and then then you may get some backing and filling before that level is taken out. But it's going to be a really important level, and I think there's going to be some good opportunities there. Amazon really didn't do anything. Came down here to 3,200, which was a support level that we've had on the charts for a long, long time. And so your levels are 3,200 and 3,250 and 3,300. We're back to the free 50 club. A break above 3,250 would target 3,300. And then you've got this prior trading range, and then you've got the big gap. But Amazon has not been showing much energy or life lately. Google, back to the midpoint, 27.15. That's your pivot. Below, probably going to go back down to the bottom of the box, but a break above favors the top of the box. So that's how Google should probably work today. Another explosive move yesterday, and I have no idea why, but Netflix 60-minute chart. This was the big drop on earnings. Been basing, toggling between 522 and 508. Got the big breakout yesterday, and just a very impulsive, I think it was up about 30. What was it? 25. 522 to 547. Big move. Came up near this high. Came back test this 542.50. So I think that's your pivot for today. And I think your first target is 550. Your second target is 552. And then a really big level on the daily chart is 560. It has not been able to break through 560 in over a year. In fact, I believe that's the all-time high, 560. So, we're getting towards the top end of the range, but that's how ranges work. Goes to the bottom, then it goes back up to the top. And if it gets rejected, it comes back down to the bottom. So I know there was at least one guy in our trading room that had that. So kudos to him. And this is a lesson to me and to you. You can make the decision that, I don't want to mess around with all this chop. What you can do, or what you should do, is set yourself an alarm at a place where you would want to be interested in taking a long. So if you said, you know what, if it can take out this level here at 525, that would be a breakout right here. And that's something that I would be interested in. Or you can say, or at the same time, you say, you know what? If it breaks below 507.50, there's going to be a lot of downside there. So I want to set an alarm there as well. So this thing bounces around for weeks on end, and your alarms never go off. You've forgotten about it. I've forgotten about it. Until that alarm goes off, and then you say, hey, this thing's running, let me get involved. And that alarm is the thing that gives you the heads up. So one of the things that you can do in your trading is when you're flipping through all these charts, on your own time, or, if I bring a bracket trade to your attention and you mark the high and the low of that bracket coming out of earnings, a day or two goes by and you forget about it. But then when it goes off, you're ready to go. So kudos. I think it was Ron that had that yesterday. Great job. Big impulsive move. And, looks poised to try and tag the top of the box. So see if it does that. Semiconductors. Opening low, broke back above this 552, which we had as a important level. That was your buy point. Came up to 256 as resistance. We had that marked as well. The real key is taking out 258, and that was our primary breakout level from before. So today, I think the active pivot is 256, but longer term, we want to see 258 recaptured and taken out in order to open the door for a move back higher. Breakout, back test, fail, then recapture the breakout. And we saw that happen once before, if you recall, back in time, where we undercut that 258, came back down, and then broke out again above. So let's wrap it up there. Again, Friday, added volatility. We've got August OPEX. Don't get trapped in any, positions that you don't want to own tomorrow. Make sure you roll or close them so you don't get assigned anything. Be prepared for added volatility. We've got the oscillator stretched to the downside. Don't get trapped having your whole portfolio be short, because we're getting to the point where I would not be surprised with a quick snapback. So be judicious in that positioning. So I hope you have a good trading day. Hope you have a good wrap up to your week. This has been Chris Buss with Traders Profit Compass. Talk to you next time.